What's up guys, John here. So today we're diving into one of the biggest housing news stories ever popping off right now. Trump and his administration is pushing for a 50-year mortgage. Yep, you heard it right, 50 years. Let that sink in for a minute. That's nearly double what we already know with a 30-year mortgage. So right now, everybody in real estate is talking about it, and you might be wondering, what's the hype all about? And more importantly, what does it mean for you? Well, let's break this down. Why is this even on the table? Let's start with the basics. Since 2025, the market has been crazy, and I'm talking about the housing market. Home prices have climbed like never before, and the interest rate have stayed above 6% for the longest time, and that's been making monthly payments super high for a lot of folks. Especially if you're a first-time home buyer, getting qualified for a mortgage is now harder than ever before. So this proposal for a 50-year mortgage is being pitched as a solution to help homeowners lower their monthly payments. And in other words, they're really trying to just stretch out your 30-year monthly payment into a period bigger, which is 50 years now. In other words, it would help lower your monthly payments. So you might think this is a good thing. Lower monthly payments, what's the hurt? But that would open the door to a lot of new home buyers, but there are consequences to this, and we're going to talk about it right now. So here's the catch. You're borrowing money for longer, a much longer time, and that means that you'll be paying interest for a period of 50 years instead of 30, and that total amount of interest you're paying over the life of the loan could be massive, more than double the loan you originally borrowed, which makes absolutely no financial sense. Think about it like this. A 30-year mortgage charging 6% means you're paying off your principal and interest for 3 decades. Stretching this to 50 years doesn't necessarily change the interest rate. So instead of paying 30 years of interest, you're now looking at nearly double that you're paying in interest. And honestly, that could be tens of thousands in extra payments going straight to interest. So for the banks, it's a good thing, but for you, it's not. So why would anyone want to do this? Well, it's all about cash flow. When you're just trying to get your foot in the door into home ownership, squeezing a big monthly payment into your budget is a hard thing to do. So it's almost impossible for many people, depending on the market that they live in. So dropping the payments by stretching the terms could lower your monthly stress. And for many of us, that could be the difference between owning or renting. So people who see their monthly budget as their limiting factor might find this super helpful. Now, who's supporting this plan? Bill Putt, the head of the Federal Housing Finance Agency, basically the government's watchdog for this type of stuff, called the 50-year mortgage a complete game changer. That's big. Supporters think that this could be the same impact as when we created the 30-year fixed mortgage back in the 1930s, which was created to help millions buy homes when the country was in the Great Depression. So in that case, what are the experts worried about? Well, the downside is real. Critics say that a 50-year mortgage could trap buyers in debt for decades. This is causing you to build your equity in your house a lot slower than you would otherwise. And normally, even worse, you end up paying more in interest over time. For people who plan on living in one home for a long time, that's a major financial hit. It's not a good thing. There's also the question about if banks are actually going to be on board with this, and how difficult is it going to be for the borrower to be able to qualify for this. Plus, some people have raised concern about the broader economy. How is this 50-year mortgage going to impact the economy or the housing market? Are home prices going to rise and potentially create a bubble like what we saw back in the 2000s? That would be a disaster. So let's take a look at the stats, the actual numbers. According to recent data, nearly half of the Americans aged 25 to 44 are currently priced out of the home buying process. The average monthly mortgage payments have risen by more than 30% over the last 2 years. And interest payments make up a large chunk of the monthly cost. And extending loans means only one thing, paying much more in interest over time. And that could only benefit the banks. So if you're struggling with monthly affordability, I get this. This might feel like an answer. But if you're planning on owning your home long-term, building wealth, this might not be a good thing for you. It might do you more harm than actual good. So what I recommend instead is this. If these lower monthly payments can put you in a house and you plan on renting and moving within a decade, a 50-year mortgage might not be a bad thing. You can explore that option. However, if you want to own long-term, build equity faster, and pay less in interest, stick to something shorter than 50 years. Even if the payments feel higher, your return on investment will be greater with a short-term loan. Now, if you found this useful, drop your thoughts and questions in the comments below. And as always, smash that like button because, well, honestly, it will help me a lot. And thanks a million for doing this. And finally, don't forget to subscribe and hit that bell notification. Till next time, see you in the next video.